Welcome to this new edition of ARGOPULSE April 2024.
Once more, global equities posted positive performance, supported by strong macroeconomic indicators and corporate earnings. Central bankers maintained their cautious approach regarding rate cuts. However, bond investors held firm their repricing of a first rate cut by June 2024, leading to a slight decrease in yield curves. Inflation and job market trends will be closely watched by investors to gauge the likelihood of a first rate cut. We are still constructive on the equity market, but caution is advised due to possible sectorial rotations, shifts from big caps to mid caps, as well as a rotation towards less richly valued parts of the market, like Europe or emerging markets. Gold price should remain attractive in a rising yield environment. We expect it to remain high due to structural buying by the main central banks and its role as a safe haven asset. Yield curves will continue to reprice in line with expectations of central banks' rate path, which may lift the long end up, potentially negatively impacting the bond market. Equity volatility remains expensive, particularly on the short end of the term curve. We still expect some volatility in oil prices due to tensions in the Middle East, as well as the increased supply from U.S. production. We see several risks given the current macroeconomic conditions. The markets should continue repricing their expectations of the first rate cut, leading to an upward repricing of the yield curve and impacting risky assets negatively. Higher than expected inflation could lead to longer periods of high rates, potentially affecting company activities and the global economy, which would weigh on all asset classes as it is not the current market scenario. The AI momentum has led to a distortion in tech stock valuations, implying that we could see a correction in the tech sector in the following weeks. The corporate earnings season for the first quarter of 2024 also carries risks due to restrictive monetary policy and economic slowdown. Major elections and geopolitical tensions may also impact market sentiment. In this environment characterized by uncertainty because of sticky inflation, high rates and rising geopolitical tensions, our recommendations this month focus on two main themes. Market participants were worried about the Chinese economy by end of 2023, causing commodity prices, more specifically base metals, to fall. However, China has since shown signs of resilience, and leading activity indicators across the globe are pointing towards an expansion of manufacturing activities for the remainder of the year. Base metal prices have corrected upwards in March 2024 and should continue to do so in the coming months, creating a good entry point for such stocks as underlyings for structured products. Following a strong run for the semiconductor industry, Nvidia has become the third biggest capitalization of the Nasdaq 100 and stretching its valuation very high. In a context of higher for longer rates combined with positive economic momentum, competitors will emulate Nvidia's product range, leading to a weakening of Nvidia's dominant positioning. Investors may rotate their holdings into competitors with more upside potential. The revolution in computing power will enable new players to emerge and take advantage of the situation to expand their market shares. These insights provide us with a compass for navigating the current complex financial waters. Thank you for joining us today. Until next time, stay informed and stay curious.
Contact your Lynceus Partners representative to explore further how to take advantage of the current market conditions.